Thanks for joining us for the executive series today. I'm speaking with Dr Don Hamson, who is the Managing Director of the Plato Income Maximiser Fund. Don, it's great to talk to you.
You too, Tom.
Why don't we talk about the performance of the fund? Because what's interesting is that there's been quite a deal of volatility when you look at the last 12 months, but you really have delivered a very encouraging performance in that time. How have you done it?
Well, we've outperformed the market, particularly in the downturn, but I think the good side is that whilst we did do very well in the December quarter when a lot of active managers struggled, we've kept pace with the market in the rebound, and so we've kept that value add over the last 12 months. So it's good to be a couple of percent ahead of the market.
Indeed. So obviously you can't, as you say, be passive about a portfolio when things are moving so quickly. In the last couple of months, we've seen long-term interest rates hit record lows in Australia. Tell us about the challenges that creates in terms of structuring the portfolio.
Well, I suppose it actually, for us, it hasn't changed the issues too much. We still see good value in the resources sector. I mean, iron ore continues to set, near-term highs. I mean, it's obviously been higher in the past, but at 110 US, it's very good money there. The portfolio has performed pretty well. I mean, I think the issue the lower interest rates are facing is that for many people that are still in term deposits or in anything linked to bank bills have dropped like 80 or 90 basis points this calendar year. And so if you're linking something that might be paying a couple of percent over bank bills, you've actually lost nearly 1% already this year. So the struggle for income's there, and I think good income-producing stocks are actually being bid up in that period. So it actually plays to our strength in that we would expect stocks with decent, sustainable dividends to actually perform well in this sort of environment.
So when you look out over the next 12 months, do you see anything that you need to be hyper vigilant of, given the fact that we're increasingly talking about lower interest rates, a moderating domestic economy, and indeed international economy that is likely to moderate?
Yeah, well, I mean, we're still, I suppose concerned a little about the retail sector because clearly if things are slowing down, but that's been a continuing story for the last few years, and you've seen the usual culprits there. I mean, that's why I think one of our focuses is we have what we call a dividend trap. We try and avoid the dividend traps because there are stocks that might be making reasonable money, but if retail sales fall off and things do slow down, then you've got to be ever vigilant. And so that's just the part of the journey at the moment. So it's much of the same because we have had a somewhat slow environment for the last 12 months anyway.
Yep. So is that, do you find yourself being wary of individual names, or is it more a sector-specific thing that you kind of have to be conscious of?
Well, there are certain sectors like retail that are more affected than others, but even there's quite a bit of difference between a Harvey Norman and a JB Hi-Fi, and some of them have actually done remarkably well and others have struggled. So it is really at the stock-specific level that we focus a lot, but clearly some sectors are affected more than others.
The other thing to bear in mind is that you pay income monthly. In this environment. Has that changed the sort of reception that you're getting from existing customers or potential customers?
I don't think so, because interest rates have been low for quite a while. Yeah. They just got another leg down, but I think hopefully we might see our share price kick up a little more if people, if we see another interest rate cut. We have seen an improvement in the price in the last month or so, although some of that I think was a reflection of the election result and people no longer concerned about potentially losing franking.
Don, it's always good talking to you. Thanks for your time.
Thank you, Tom.
And thanks for joining us for the Executive Series.